Hey guys, I'm going to teach you how to get some killer trades like this trade right here, being able to find a reversal off of this key level and being able to also get an up move right here and also be able to get trades like this. So if this interests you, and if this is if you already can see right here what we're doing and how we're finding our setups, then go and look at the charts, find it for yourselves. And for the people that need a further explanation and a model that goes in depth, please stay tuned. And yeah, this is Jelly Trades. You can follow me on Twitter, Jelly Trades to Market. And yeah, I hope you guys like it, and if not, leave in the comments. Okay. Hey guys, thank you for sticking around. And here we're going to go into the basics on how to find the high probability setup. And first you need this underlying knowledge. A lot of ICT guys already know this, but if you're new to ICT, stick around. And if not, you can skip a little bit ahead and then we'll go into the next part. So here we have the swing high, and this is just a traditional swing high. You can feel free to I would say, if this is your first time learning, after watching this 1 minute of me explaining it, look at your own charts or just pause the video and look at these charts. So right here we have the foundation of a swing high is basically a pattern the market creates, and it starts with, let's say for this example, a swing high. Obviously we have a lower high to the left, a highest high in the middle, and then a lower high to the right. So that creates the swing high pattern. Here we have the swing low pattern, which is a lower high, a higher, sorry, this is not supposed to say lower high. Okay, just forget this and say a lower low, lower low, a higher low, a lowest low, and then a higher low right here. If you start saying this a couple of times, you're going to get confused yourself. Okay? So if you guys, just pause the video and try and find these structures. You can find one right here. You can find one right here. You can find one right here. And we're going to tie this into finding a short-term high and a short-term low that will give us our preferred liquidity points that we can then use in the lower time frames and make a model out of this. You can make a model, a swing model, a daily model, daily time frame model with this. Whatever you want to use. This is just a foundation and the building blocks that ICT gave out. If you guys want more resources on the advanced market structure, you can go to 2022 Mentorship, episode 12 and 13, and he goes into more depth. And now we're going to go into more depth into this model now. Alright guys, so here we have the same example. We have a swing high, and we have right here is something new, which is a short-term high. And it's basically the same pattern. This one is, this leg, this swing high is lower than this up move. And this swing high is lower to the right. So that creates basically the swing high on, let's say, a higher time frame. We could sure find it on a higher time frame, but I'm not going to do that now. But you guys can definitely go and check that out. And this just goes to show you can do a lot of things. You can study this particular pattern and apply it to market structure. What is okay if this is a fair value gap? Maybe when we create this pattern, we could start going to lower time frames and looking for a setup to the downside. But right now we're going to use this as a liquidity zone. So we're going to bring out the high and put this as a sell side, buy side liquidity. So there's buy stops resting above here. And this logic also makes sense because notice how this is a 5-minute chart. So we also have some liquidity over here, gets swept. And here we have accumulation, gets swept. So even over here when we have the lows. So over here we have the lows, and you could see that price, is hovering around there. So it is like price, it's been being respected for a while, right? If this is 5-minute candles, that means that after this swing low has been formed right here, it's before getting rejected, it's been there for around an hour. So there's definitely people who have entered into a position, placed their stop below the swing low or the short-term low, and you can find both of these to be entries. You could use this you know, the last swing high as your entry criteria to find it. You know, like let's say back. Let me go see if we can go back. Yeah, right here. So we have the swing high right here, right? This swing high. You could see you put a buy side liquidity right here. You can see price has found the swing high accumulation. We come and we drop. So now we come into the second part of that will make this high probability for every single trader out there on any time frame. This part is basically waiting for price to take it and then show a candle reversing. That's basically simple, right? So if let's say on the 5 minute, right, you would want to see price grab it and then have a nice down candle going down. And then this is where we can go into the market and look for our market structure shifts, our breaker blocks, our fair value gaps, mitigation blocks, whatever you want to look for your entry patterns. I'm just giving you the framework, and I'm going to give you a model that I'm going to be using to find these setups while I'm backtesting. Okay guys, so for the model that we're going to be doing is just going to be a simple displacement and then a return into the displacement fair value gap. And I like to call it something else. Like let's say right here. So meanwhile, this is that short-term high that we were talking about. So when price comes in the New York session, when price comes and takes out that level, you know, we don't really have displacement here. And if you guys want a whole video on displacement, leave in the comments. But I'll go over some basics because it's going to help you with the model. Here we have that displacement leg, right? Here we have that displacement leg. This is not displacement for me. This is not, two candles aren't displacement. And we don't displace below a low. That's important for the model, guys. So I'm actually going to write out the model real quickly, and I'll show you guys in a bit. Okay, guys, so here we have the list. Basically, first step, short-term liquidity taken is gotten taken right here. And you also, I forgot to add this, you would want to wait on the 5 minute. You would want to wait on the 5 minute and just make sure you get that down candle going. So if this is obviously you're bearish, you want it to get taken, and then you want to see a 5 minute candle going lower. So put that as the first step in your notes, because you should be drawing notes too. Alright, so now we go back. First we find this. Okay. And then we see a huge displacement closing below a swing. So here we have, just like how we did before, we have the swing low. That's what we mean, a swing low, because we're bearish. So you want to see a huge displacement. Check. And then the entry will be on the fair value gap that either breaks it right here, or a fair value gap before the break. So it'd be right in here. And usually you won't get, you know, I won't say usually, but if your displacement is big enough, you know what I'm saying, you will sometimes not even get an entry, which is good. Because that's a chance that's saying that's like, all right, you're in the right side of the market. Just because you have a displacement, you don't want to be entering down here when this is the optimal setup where you can get a 1 to 5, whatever you want. And we'll find where we actually do get a fill. So obviously this is hindsight, but later in the video we'll do a back test of 1 to 2 trades. Here we have a swing. A short-term low right here. So we have the swing low, and then the highest right here. We get rated, and we have that up candle. So we're going to be looking in here, and you can even go put a little mark right here, 11:10. And around 11:10, the market has went up above a swing low right here, and this is, I'll take this out. This is the fair value gap that shows displacement. So notice we have 1, 2, 3, 4 candles going up, and this is just showing that we really want to go back into the range. The 5 minute is looking good, so you can even enter right here because that's part of the model. Just again, entry is a fair value gap that broke market structure. Here we have that swing high that got broken, so you can enter right here. Whatever your risk reward, whatever you feel comfortable. I usually do a 1 to 2 for these type of models. And this is a model that I recommend that you stick with for a while, because this will show you some good results if you stick with. And we're gonna go into the backtesting now, but I'm gonna keep the backtesting raw, super raw. If I lose, I'm not editing it out. And in trading, I have to say it, you will lose, even if you have a model that's sound, has your rules, has everything. And meanwhile, remember, I didn't even say anything about bias. There's no bias that's needed in this model. So you guys have everything that you need with this model to never even watch these videos again. Take it to the 1 hour, take it to 30 seconds. Figure out what works for you with your current job or with your financial, situation is. And yeah, I'm going to go into the back testing, and I'm going to keep it raw, guys, because that's what we do over here.
Raw doggy!
So here we're going to create a new simulation. We're going to do NQ. See what's up. Yo, make sure you guys check out Software Forex. You can get NQ. It's not affiliated or anything, but you can get like data from 2012 all the way to 2023. So check them out, guys. And I have a tutorial in this video, or not in this video, but in this channel. All right, guys. Here we are. We are on October 10th, 2023. Sorry for the brain fart, guys. I'm doing this one shot raw doggy, you know what I'm saying? So here I already can tell that we have a short-term high here. We have a swing high, and a swing high. This right now, you guys are gonna have to take my word for it. This is GMT 5. I can also put this kill zone ad that I have. So basically 13 is 8 o'clock, so this is the New York kill zone. So sorry about that this is not in the right time zone. I just kind of use it like this on this platform. So here and also want to disclose another thing. All my trades are always going to be after 9:35, just because like that's personally how I like to trade. And you could please backtest this at 7 o'clock. And if you guys really want that, comment on. Even if I get one comment, I'll make a video on backtesting this from 7 o'clock. I just personally, I'm going to work at 7 o'clock. I'm on a train, New York City. I'm not going to be doing that shit. You know what I'm saying? So here we got, I don't like the volatility at that time. So I'm going to wait until 9:35 over here. And if you guys ever want to see what time frame it is, over here we have the M5 right here. You could see, and I also put this right here, M5, so you can see the time frame, just to make it as transparent as I can. So we are immediately at market open 9:35. Market was just open. We have swept this level, and this is why I say wait for one down close, because you could see we never got that, so we never gonna get a sweep. And we have a swing low over here that has not been breached yet, so we're gonna just skip, see what price does, see if we make a swing low, and if not, we go to the next day. Simple as that. So here we have a swing low, and it's about to be 12 o'clock lunchtime, but let's see if anything populates here. So we have a swing, a short-term low, and here I'll zoom in for you guys, for the blind folks in the back. Here we got a swing low, a higher swing low right here, the lowest swing low, and then a higher swing low. It's just got formed. So if we get a move down, oops, I went 15 minutes instead of 5 minutes. So here I'm just moving the chart by 5. So we get a destroyer of a move down, and you could obviously see if you want to take a trade there, but based on the rules, we would want it to like grab it, and then the next candle opens up green. So not something that's so disruptive displacement right there. So it just keeps scrolling up by. No swing high here. We have a swing high here. Okay, here we have formed a swing high. So if we get another swing high getting formed here, so we have a swing high getting formed here. So if we get a sweep here, and just to let you guys know, we do only have about this PM session. I already trade PM session. But if we get a sweep here, All right, next day. All right, guys, just looking at the charts right now for the first time with you guys, I noticed that we have a swing low here, swing low, and then swing low. So this is our short-term low right here. And we could just put this here. Nice. Okay, cool. So then we have a short-term, we have a swing high right here, swing high, and then a swing high here. So we have another one right here. And we're just going to wait for one of these to get broken. Obviously, we do have a swing, swing, swing. So we do have another level right here. And that's just nice to just have just in case, you know. So we'll just wait for one of them to get broken, and then we'll see if we get an entry. So we have this one getting broken. And since we have one that's slightly lower to the bottom, unless we have some huge displacement, I will not be getting in. So I want to see, yeah, not really getting in. You guys could probably find something here. All right, so we do have a double bottom getting formed here, and this is when the, all right, so here we, you know, I was just gonna say this is when it starts getting a little iffy. Here we have that sweep and then a green candle. So now we go into the 1 minute and we look for that break of structure that we were talking about. I'm gonna skip to the 5 minute just because, okay, so here we do have a swing high right here, move higher, we come down. You know, this could be an entry if you guys would take this. But personally, this isn't enough swing high, because just look how much does this little dent really do to the overall price action when you zoom out? You know what I'm saying? Not much. You kind of want to see a nice row of candles to really get you in the conviction that price is going to go higher. You know what I'm saying? That's just my personal displacement kind of ideology, and price doesn't go my way either way. So we want to see price going up, and the criteria still stands. You know, we could have just swept this, and we could still be going up right now. So it's important to check the 5 minute, you know, I think, while you're doing these type of trades. So here we have more of an impulse higher, which I like. I would like one more candle going a little bit higher, and then we come back into this fair value gap. But, you know, I actually kind of like this fair value gap. I kind of like this little 3 legs going up. I'm going to do a 1 to 2 here. This video is getting pretty long, so I might just cut it here, but the next video will definitely be all about, okay, so we don't get our entry, but the displacement was there, guys. And yep, we can go to the next one. Guys, just to cut the video down a little lower, I know I said I'm gonna keep it raw doggy, but I don't want to make this video so long. If you guys want a long video with, you know, completely raw doggy, you know, I'll go through it with you guys. But if it's cool that I just skip to the next one, and just the sake of time and your time, and just show you guys a live execution, you know what I'm saying? So I'm gonna do that for now. And if you guys really want that that raw video, leave a comment, please. And yeah, hope you guys enjoyed, and I'm pretty sure you guys got a lot of information from this. So if you guys want to exit out this video, go ahead. Okay, guys, so I might have found something nice. So here we have price shooting down. It looks like there was some news. No news. Okay, so here we have a swing, and then a swing high that's just a tick higher, and we have a swing here. So we came up, we grabbed it, nice down candle. It's 10:25, so it's also a good time to be trading. We'll go into the 1 minute now, see what's up. All right, cool. So we have a nice displacement here. Even if you zoom out, you could tell that this is some displacement that's coming into the market. So we want to see one more candle going lower, obviously. Cool. So we will actually put a sell here. Feel free to figure out if you want to put your stop up here or up here. I'll put it up here for conservative reasons. But yeah. And we could also just watch this play out for coolness sake, right? But yeah, guys, you really should try and find like an application like Software Forex. It's really fucking beautiful, man. Excuse my language. So here we're getting pretty close to our objective. We have fair value gap here. We have a tick. We have some liquidity up here. And it looks like we come up and fill in this fair value gap. So obviously we don't want to see a high over here. You see, this is where I would instantly put my stop loss right there. Yep. So I would put, in a normal scenario, I'd put my stop loss right here because we filled in this fair value gap. And if you guys want to check out my previous video, that equals an intermediate term high. So you don't want those getting really destroyed. But yeah, price was just accumulating in our entries too. So that's another reason why you would want to exit out the position. So it was kind of pointing your hand that the price is not really going where it's wanted to go and disrespecting your entry. If we go back to the 5-minute, we could also see that price is actually creating another swing high opportunity right here. So that could have also gotten you out of the trade if you would have stopped out. If I would have stopped and looked at the 5 minutes while we were in this trade, you know, you could also learn from something, a mistake that I just did right now, and something that I've discovered that is very important. Look at the 5-minute with this strategy. So let's see if we get a down close 5-minute, and we can actually try and see if we can enter again. All right, so we swept the high and we did not get a down close candle. So we could, you know, wait for another one. All right, cool. I feel like you don't really need to have the 5-minute be a down close candle, but you don't want to see accumulation. And you also don't want to see an up candle because that just ruins the setup, I think. And also, this is something that you guys can check out on your own. You know what I'm saying? I'm not the prophet. You guys use those brains, use those, you know, use that analyst in you to figure it out. But yeah, this is no displacement for me. So I would wait. And this looks like accumulation. Still no real displacement for me. See, now we're getting some displacement, but it's already a little too far for my liking. You see, but this is when you can probably go into like 2-minute chart, check out something else. You know, let's go check out a 2-minute chart. Yeah, so I don't have a strong conviction on this 2-minute trade. It doesn't give me like that raw power that this gives me. You know what I'm saying? Like, this is a market structure shift. We come above this high. We have this fair value gap. We come up strong. We come down into the fair value gap that breaks the high. This is a clean market structure shift for me. This is not giving me anything clean at all. So I'm just going to skip this, you know, because that's what we should do. You know what? Sometimes these things happen where, you know, it doesn't look good on the 1 minute and then a complete sell-off. Yeah, just how it is. But at least you guys know that this pattern definitely works. Here we have that short-term high getting swept. And then if you guys would have considered this a displacement in your book, my book it wasn't, you would have been in this and you would have made a lot of money, man. Alright guys, so this is the next day. Here we have price making a short-term high up here. You know, right here, swing, swing, and swing. It took out this swing. Like I told you guys in the video that this could be a possibility, something that you could be looking into. It was in the earlier videos. I did say it, guys. I did. But also we have a swing, swing, and swing here. So we see a 5-minute going up, and this is the next day after this huge move down. So, you know, it wouldn't be bad to see a move up. But obviously no bias is in this video. So here we have market going down. We don't really have a swing going lower, but if we do have a nice green candle, I would bend the rules. Yeah, so I wouldn't be entering in this, but you know, just giving you guys my analysis by the second. Alright guys, so I might have found something that was really nice. Here we have price the day after the other price I just showed you. Here we have a swing, swing, and swing. Highest right here. I told you guys that this could be a liquidity that you guys could be looking for too. So price came up here, sold off, and then we also have a swing, 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 short-term low. Price came down. Then we have this nice green candle that I like to see. So here we're gonna go on the 1 minute and see what we can find to get into an entry, so we can stop this video. So much editing for me. Okay, so we'll put this right here. Obviously, you know, this is a huge stop. But this is just how I kind of run my stuff, so conservative nonetheless. So we got a touch into us, into the fair value gap that broke there's a swing high here, we broke it, and we're just hovering up right now. And if you guys seen my last video, is how to conserve, make sure you don't turn losers into winners. So you can go ahead and start like seeing, all right, here we have a order block right here, and just for fun we could do this. Here we have an order block, here we have another order block because we have fair value gaps here. See how price respects that, and yeah, just see how price moves. Here we have a lot of resting liquidity, so I wouldn't mind seeing a price going up here. Would not mind that. Still could be that the buyers are in control. We just gotta see. So here we'd want some displacement going up. Oops. Sorry about that, guys. Here we have some of another fair value gap getting held up. And we're getting close to 30 more minutes until the market is closed. Obviously, I'll close it before the market ends, but we'll see what price does. Here, price is getting respected by fair value gap, building up liquidity. Could go down. But yep, the market is about to close. So overall, this trade did go out my way. It just didn't go and give me the full profits I wanted to. But we were at this point, you were 30 minutes away from the market close, so you could have taken this. Obviously when you're simulating, you want to do everything the real time, but this is just a video demonstration. If you guys want something like me going through the trades, going through 10 trades of these and seeing what the profit and loss is, I'm going to be going through 60 of these trades and giving you guys the results. But you guys, if you guys enjoyed this video, please like and comment. And also, I'd like to say sorry about the results. I just didn't want to make this video super long. And yeah, just wanted to keep it raw, Raw Doggy, Jelly Trades. Follow me on Twitter. And have a good day, guys. And, have fun.